Welcome back to the Crypto Clown World channel. I am your host with the honks, Jason Bruce, and no music for this video. I'm gonna do a special on dollar cost averaging into the market, and I think it's important right now because people are probably feeling a little bit of FOMO. Might feel like they've missed out on a few projects or a few trades, and some folks may still be underwater on projects from the previous run as well, and I just kind of want to speak to how we should be tackling that right now. So I think it's actually a fairly simple approach that we should be taking. So let me actually flip over to the total market cap. This is all of the cryptocurrency's market cap, and if you take a look here, kind of what I want to focus on just in terms of a little bit of a technical part of this. We have bounced off of key moving averages and closed several candles above that on this 2-week time frame, and you can see that for this total market cap we do potentially have a lot higher to go, but the idea is that we have bounced off this key support level and we are actually a little bit overbought here. If we move into the total 2, which just includes Ethereum and the rest of the altcoins, and I believe the top 100, you can see that we've bounced off the 200 weekly moving average, which is a key area of support for any cryptocurrency to start a bull market or bull run. And we've closed now 2 candles above that on a 2-week time frame. As we move over to the total 3, you can see that we're really not even entirely confirming a bounce off of this 200 weekly moving average yet, which tells you that some of the altcoins have yet to break out. This part of the space is still lagging behind. You do still have a chance to average into some of these coins before the market as a whole kind of gets up into this area here, where large entities are going to want to tap this for liquidity and bring the price back down to these levels before we see potential blue sky breakout for the next bull run. So the idea being right now, if you haven't gotten into a project yet and you're interested in it, you can still jump into those projects and start building a position. If you're looking to get short-term gains on that may have sailed on certain projects, you may need to do a little bit of technical analysis before entering. Try and find the projects that are still low, that haven't broken out of these types of patterns yet. Adam and Eve pattern is the predominant breakout and bottoming pattern that I'm seeing in the market right now. I did do a video on that. Make sure that you check that out. Keep in mind what I'm saying here. Nothing should be construed as financial advice. Make sure that you're getting a financial advisor. Do your own due diligence and research before doing any investments or jumping into any coins, projects, or trades. With that, I really would like to ask, and I don't want to beg, but it's just super important. This is a young channel and I need people to push the algorithm for me. If you haven't yet, please like this video, subscribe to the channel, make sure that you're hitting the bell for notifications too. We're going to bring you a lot more of this type of content. So to keep going on, if you're building a position, you can still do that and even get profit out of it. Take that profit and build it into more profit in a larger accumulation swing before we get into this territory up here, where we're talking about some of these altcoins having absurd valuations. So you can still build positions right now, not as opportune as it was with these 2 swings that we had here at the end of last year for altcoins, and then over the summer this current year. But really, probably the most important part of this video is, you have to ask yourself a question. Are you underwater on any projects right now? Do you still believe in those projects? Are you still thinking those projects are going to come back for the bull market? If they are, and if you bought up here in this range, and you bought around the top for any project and you held it all the way down, which inevitably a lot of people do even if it's just, a few projects that they thought for sure, hey, this can't possibly go down like that. Maybe you sold some other stuff, whatever, took some profits, but everybody rides something down into the bear market. It's inevitable. And I wrote a few down. Algorand was one of them. There were a few others. But I did decide to just capitulate here and sell for tax loss harvesting. That's kind of a completely different story. But I did rebuy, you know, right back on January 1st. So uh, realistically, you know, if you didn't do that, if you haven't been averaging in to these areas and you're, holding a bag that you bought up here and you're down 50, 60, 80, 90% still, versus the price that you bought in at, you should start to average in on that bag if you plan on holding it for the bull run. There's no point in waiting that long for that small of a return on investment on when you could, you know, potentially get the type of gains that uh, could make a big change in what you're trying to do with your portfolio. So, um, if there's coins you believe in and you're down big, like I said, 50, 70, 80, 90%, keep averaging into that coin until you're only down 10, 20, 30%. And at that point, you could probably feel a little more confident that your bag is going to come back in this market. Um, make sure as well that you're not chasing green candles. Uh, for me, setting a DCA schedule is just really silly. You know, if you DCA every Wednesday or every payday or whatever it is, um, especially every payday, to be honest, you can't trust the market to give you uh, you know good prices every time that the normies are getting their slave wages on Friday. The market makers don't move the markets around based on that. So you want to average into the markets when they're pushing the price down. And shout out to Paul Democrito over at the Crypto Factor for coining this term. But you want to dollar swing average into these positions, and these swings being when you're down in these areas here, you're down in these areas here, you're down in these areas here. We're up here now. We just had all these consecutive green candles. Do you really want to average in here? Possibly not. But once again, you're retesting critical support here as well. So add some technicals in there as well. Do you want to start averaging in here? Have it come all the way up to this area, maybe sell off some, and then come back down and start averaging again when we tap this liquidity more than likely again next summer? Or, do you want to wait it out, wait and see if the price comes up without averaging in, see if you can sell off here and then average in more aggressively when you perhaps build some fiat? Um, there's a few different ways to tackle this, but really the best way is not to chase green candles. Average in on red days. Make sure that you've got a little bit of capital on the side to do that as the market progresses over the next few months. And try to average in on projects that you're down on or on projects that are still down in comparison to the rest of the market that haven't broken out yet, that haven't made the big gains yet, but that you still feel are good projects, or that people that you trust have said are good projects, or that, especially in my personal opinion, being a technical analyst, first and foremost, that the charts are telling you would be good to average into. So, with all that said, I hope that helps you. If you're still, having questions about averaging into the market, uh, you know, eh, you can still do that. Just make sure that you're using some type of strategy, and it'll help you come out on the other side of things a lot better. So, with that being said, I am Jason Bruce. This is Crypto Clown World. I'm going to get honking on out of here. Like and subscribe, folks. Love you. Take care. God bless. Talk to you soon.